This meeting is being recorded.
Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his Wall Street friend, 10 years in the business, Mr. Taylor from Life Goal Investments. How you doing, buddy?
I'm doing great. Thanks so much for having me. Interesting times we're in here.
Yeah, so I've enjoyed our conversations now, running out about three or 4 months. Really know your stuff. I've never asked you this, and I think it's time. So you stepped out of a promising Wall Street career, which, if folks don't know, could easily pay 6 figures and probably most of the time pay 7 figures. And you went out and created this company, Life Goal Investments, that has 3 conservative, boring ETFs in a pretty big bull market. I got to ask, what the hell were you thinking? I don't understand. What's going on? Why'd you do that?
Yeah, no, thanks so much for asking. So when you look at it last year, we come from a small town. We grew up in the middle of nowhere, and we had friends that continuously come to us and say, we don't know how to invest money, essentially, and we don't have enough money to warrant the needs of a financial advisor. So we're left out here kind of shooting from the hip, doing things that we probably shouldn't do. And last year it worked great in that raging bull market. But what we foresaw happening was a downturn eventually coming, and them left buying the things that work in a good market, but not having the education to combine some of those tools that may hold up better in a down market or even a sideways market. So that was kind of the catalyst right on the front end.
So first off, when you say we, I know it's you and your brother, just so the audience may not know, right? This was started between 2 brothers. And again, your stated mission was really to create, I'll call it a balanced portfolio, or portfolio for all markets, for all people. Is that fair?
Yeah, totally fair. I think what we did was, my brother's name is Brett. He worked on Wall Street as well. Brett and I both worked with some of the wealthiest families in the world, or in the United States, I'll call it. And we worked with them to create this ideal portfolio of blended assets with certain correlations, et cetera. All nonsense, right? I mean, not nonsense. It's meaningful, and that was the right thing to do.
It's meaningful if you understand it. Otherwise, it's confusing.
Right, well, that's what I meant when I said nonsense, right? So what we did was eventually we looked at each other and we were like, hey, man, we grew up blue collar as it gets. Is there a way to do exactly what we did for those people that have $50 million in that family and bring it down to be invested with anybody that has a Robinhood, a Fidelity, a Schwab platform, and have it available in one single ticker symbol for $10 a share? Yeah, those things are called ETFs. And those are widely accepted in the market at this point. And the big differentiator that took place last year and a little bit of 2020 as well is finally people came to market and said, no commissions, no commissions on ETF trading. So what that allowed us to do then is bring something to market at $10 a share. And there's no more $5 commission, because that would massively eat into a $10 per share price. And say, okay, here it is. All of the cooking that the ultra rich get, available to anybody with a brokerage account that has $10 to put to work.
So let's talk about what's in the $10 or in the portfolio, right? It's a split of stocks, bonds, commodities. Again, kind of explain to the average person that may not even know how to spell ETF, why having this blended or balanced portfolio is helpful to them.
Yeah. So right on the onset, an ETF is considered like a mutual fund. So a mutual fund, as more people know about, are able to take stocks, bonds, commodities, real estate, all and house it in one wrapper to be purchased with one single ticker symbol. The difference with an ETF to a mutual fund is that it can be bought on all of these online brokerage platforms now, where mutual funds almost exclusively cannot. So the ETF is available on all of these platforms, and you can trade it throughout the day like a stock. Now, it's not to say that they're meant to do that, but it's much more efficient to be able to move into and out of it at any time. Say, Michael, you bought one of our ETFs, and 3 weeks later, all of a sudden you're like, oh man, I actually need that money now. You can place that trade and get back out of it without any repercussions. The other thing that comes along with an ETF versus a mutual fund is that they're significantly more tax efficient. And that's a little bit of a in the weeds conversation, but know that if you're buying something in a brokerage account that is taxable, if you could buy an ETF version or a mutual fund version, the mutual fund version is going to hit you with more taxes over time than the ETF version is. So what we did was we said, hey, when you look at a financial advisor, what do they build for the rich clients? They put together a slug of stocks, a slug of bonds, a slug of commodities, things like corn, gold, oil, et cetera, and then a piece of real estate as well. let's put all of that within one single ETF. And
Mm.
we'll build a couple of them. We'll build one that's higher risk and we'll build one that's lower risk. And whatever the risk tolerance of that individual is, they know they can buy one versus the other of that and get a fully diversified strategy. And why do you want a fully diversified strategy rather than just going out and buying stocks? Well, what if 2022 comes along and in the first half of the year, stocks are down 20%?
Yeah.
You want things that are diversified, that act differently, that help portfolios hold up well
Mhm.
in down markets.
Yeah, well, let's talk about those rich families first, because again, something, people may not realize that sometimes in the rich families, they're about preserving what they have and making sure it moves on to the next generation, right? They're custodians of wealth, and their job is to make sure it goes on for multiple generations. And that is why they're not usually out very far on the risk curve, right? They may
Correct.
take small slivers of it, right? Gambling, if you will, but their job is to make sure it exists for generations. Is that fair?
Yep. Yeah, no, it absolutely is. And where they take risks are not all in one bucket. So they
Right.
don't take all of their risks in tech stocks or all of their risks in whatever it may be. They may take big risks, but they're going to take them here and here and here that
Right.
each do different things at different times. Those are called low correlating assets. That's not putting all of your eggs in one basket, if you will.
Yeah.
So yes, to your point, they diversify. And I think the other thing that's different that people that are retail investors have to understand is that although you may be 30 years old and you may have 35 years until retirement,
Mhm.
that may be how you should be investing your assets within your 401k or 403b or 457. But in your brokerage account, outside of those retirement accounts that are taxable accounts, are you really investing for 35 years? Or is there a chance that something comes up in your life that you need those assets for and you need to spend them down?
Mm.
Well, if you're sitting in a situation right now where you're 100% stocks and you're down 20%, oh boy, now
Yeah.
your radiator goes on your car or your AC unit blows, or you think you want to buy a vacation house
Yeah.
or whatever it may be, and you need to use those assets, all of a sudden they're worth 20% less than they were, at the beginning of this year. So
Mhm.
again, life happens, and having diversification and thinking about time horizons that might actually be shorter than your retirement date, because those assets might not be used in retirement. Again, that's a different account than
Mhm.
your 401k account is.
Yeah. Again, these three ETFs again are balanced, right? And again, that's not what most people think about, right? Most people think about, hey, I'm going to buy these stocks. Maybe they're going to buy an index.
Right.
I don't hear a lot of people talk about, hey, I want a little bit of bonds, a little bit of stocks, a little bit of commodities, currencies. Why do you think that is? Is it just because trading accounts kind of make it like Robinhood makes it really easy to and sexy to buy and sell stocks? Why don't they think
Some,
about the
some,
balanced portfolio?
some of it has to do with that. Some of it has to do with old school Wall Street
Hmm.
has a little bit of vested interest potentially in not doing that. And what I mean by that is they have bond portfolios, they have stock portfolios, they have commodity portfolios, all individually. Now, if someone comes along and combines them all, what they might do is take some of the assets from all of them and put them into that center one, therefore having a lower. What I'm getting at there is if I step in and create this multi-asset ETF, I might peel from all of those different areas.
Mhm.
So if a company has each of those three individually and they launch one that combines all three, they don't really have an interest in doing that because then they might see outflow out of all three of those into the new product. So
Yeah.
they're essentially cannibalizing the assets that already sit there is probably a better way of putting that.
Awesome.
And again, I think at the end of the day, what it is a realization that tough times do come on the market, right? It's a cycle. It's
Ray
going to play
Dalio
out.
video number 2. Yeah.
Exactly right. Again, last year when we launched these funds, there were 3 conservative ETFs into a market that was a raging bull market. People are like, you're an idiot. What people want right now is crypto and the next iteration of high tech stock, things that have valuations that are going crazy. We stayed away from all of that and said at some point, we're not saying it's coming right now. It came sooner, admittedly, than we thought it would. At some point, realization is going to happen, reversion to the mean is going to happen, and people are going to start to look around for things that have a lower level of risk.
Awesome. Well, if somebody wanted to check out what you have, learn more about you, where should we send them?
Yeah, you know what? Come to our page on Instagram. It's at Life Goal Investments. You'll see our 3 tickers there. You can plug through to our website and get more information there. But that's a nice base to get the real crux of what we're trying to do with the company.
I love what you're doing with your daily posts. I see them every day, comment a lot. I really do think you guys are trying to help people just see what's possible. I think the raging bull market spoiled a lot of people. And I think the next 2 years, it's an opportunity to learn, to be humbled. So it's going to be a lot of fun. So Taylor, thank you for all you do, man.
Yeah, thank you. Appreciate the time, Michael.
Mhm.